Good morning. I hope you're doing well and welcome to today's edition of 600 Seconds of Trading. My name is Alejandro Zambrano, Chief Market Analyst with Trade Captain and Amana Capital. I'm going to provide you guys with a quick update as we usually do at this time of the day. And I'm going to take a look at key markets as the Euro dollar, Bitcoin, crude oil, DAX, and gold. And going to talk a little bit about the economic calendar today as well. We have Super Thursday today, which is a big event from the Bank of England. So that's what we're going to be doing. Now, before we start though, as always, I need to stress that trading financial markets is unfortunately risky, and there's a general risk that we'll lose all of our invested money. So please bear that in mind before you start trading. There's a little link here, risk disclosure statement. You'll find that on tradecaptain.com for more on that. As well, I want to welcome everybody that's watching us on Periscope today on the Trade Captain handle. And if you want to watch this Monday to Friday, then don't forget to visit tradecaptain.com and the live trading room for these updates. All right, let's get going. So we have 600 seconds to provide you guys with today's market update. All right, so we're starting out with Euro, which is doing really good for us right now. You might remember I said a break to the downside here could take price lower, and I actually went short myself here on the break, and we're about to reach the profit target, which is 122.23, or pretty much these levels. Now, something that's important to remember is that the market does not bottom out at 9:08 a.m. in London. If it's a bearish day like it is today, then statistically it will bottom out in the afternoon. So it wouldn't surprise me if we go a little bit lower here. However, if you're not short, unfortunately you're not invited to the party. I think the best strategy if one is not short is to wait for that corrective move. So if we take a Fibonacci from the current low to this level up here, which is the last interesting high. Now you do have a high here as well, but it's not really that interesting because it's such a fragile high. Rather, this high is interesting. Then you get these three levels, actually four, but let's focus on these three right now. And this is a 50% correction more or less. This is a 4-day exponential moving average. So if it flips back to 123.12, then I do think traders that are not sure are probably going to sell a bit more, and then they're going to target the low again, and eventually maybe down to 121.65. I think in general this is just a big corrective move. Now this is the euro versus the USD. If I just zoomed out, you can see data here from November, and we had a very strong move, right? And this push as well, very strong to the upside. So I'm thinking here that people are probably just gonna book some profits here. Sorry, are booking profits, and some people are selling, like myself. And the market is probably gonna go down to support, and then maybe from these levels down here, so around 121 or so, I suspect traders are gonna look to buy again. Might be earlier, of course, but as long as the price is capped by this downtrend, then I will be bearish rather than bullish. All right, this is Bitcoin, and Bitcoin had a nice little rally, and obviously people are sharing that. It's a percentage-wise, it's a strong move right to the upside. It's 38%. That's not bad. I mean, if you bought here and trading, then this is good. However, though, it doesn't actually change the overall structure of the market. So maybe this was the low. I mean, we talked about it before. I mean, from a long-term perspective, this is a daily chart. It's a nice healthy bounce here at an actual low. These levels were lows as well, but they're not like a swing low like this one. So maybe this is it. Maybe we'll bottom out here and then move to the upside. However, I'm on the sidelines and I'm waiting for this, and I suspect this is going to go down again because the price is still guided by these lower and lower highs, and the last high is up here right now, but it's not a confirmed high until we move to the downside. So I remain bearish. The technical trend is bearish, so I do suspect the market can roll over here, maybe go down to 62.30, and then we're gonna lower this key level down here. The alternative is this just goes up, get us stopped out, and then on a pullback I will probably try to turn bullish again and aim for 12,000 and then 13,000 and so on and so on. Now here's crude oil. This is an amazing trade and setup. Let me show you on the Twitter, or on my Twitter account, if you don't remember how that looked like. this went so good. Most of the other stuff as well has been going good, but this was the clockwork. So this, you might remember, this is the setup I shared with you guys 2 days ago, and I said, look to sell here at 64.12 with stops at 65.49. At least that's what I thought the market's gonna do, and surely they did. It rolled over here and then moved back down, took out this low here, which is 62.84, and then touched this low down here. A little bit like the stock market, almost corrected all of its returns for this year. Now, in the short term, I think it makes sense to remain bearish. There's really no reason to buy when you can see that the market is clearly moving to the downside, unless, of course, you have some other sort of strategy that tells you to buy. And my strategy, which is the trend following, tells me to sell. So for the EMA here, fib from the low to the high, this is the 50% correction. So I think traders that book profits here are probably going to look to sell at 62.68 again. The alternative, and because this is a bearish trend, is that we could potentially just break below 61.08, and at that point just go down to 60.09 down here. Here's gold as well. One of those setups has been working out really good. This is the original entry a few days ago. You might remember the market moved. Actually, we moved up here. The idea was to sell with a stop on this side. The stop was reduced now, and we moved down. We have moved to the first support level and potential target. But if you look at a daily chart, you'll see that this has more scope to decline. And if you look at this as well, this is a left shoulder, right shoulder, this is the head, and this is the neckline. So you have this head and shoulder pattern. The breakout is from here more or less. We suggest that we can go down to 1,289. So this is the strategy. If one is just scalping, then this is a nice little gain. My feeling though is that this will probably move down lower in the next few days. And again, there's no right or wrong, unfortunately. If it was, trading would just be ridiculously easy. But I think as long as trade below this high, if we swing back up to 1,326, I think traders are gonna look to sell again. Here's the DAX, and the DAX, breached support here. This is 12,737. If you look at this, this is 2017. This is a low here from August 2017. You have that big rally, and we just need to look around. Unemployment rate very low across the world. People making more money. Inflation is a 1.5 or so in the US, so it's not like a big deal. Same thing here in Europe. People obviously a bit worried about what's going to happen with the Fed. Yes, they are increasing rates aggressively, but I think they need to keep on increasing interest rates more, because there's something called the financial conditions, and they're not actually higher despite these increases in interest rates. So it's not more difficult to borrow money in the US even though they increase interest rates. And this is as well something important to remember. So inflation in the US is about 1.5, and the interest rate as well is about 1.5. Now, with that in mind, if inflation is a 1.5 and interest rate is a 1.5, then what's your real interest rate? The inflation adjusted interest rate. Well, it's a 0, right? So if it's a 0, again, it's not actually costing anything to buy, because ideally, wage growth is at 2.9, right? So even if inflation or interest rates have moved up, you're getting more paid. So who cares if you're paying a little bit more? And I think that's keeping things in check. And that's actually the whole plan of the Federal Reserve, right? They anticipate inflation to tick up to about 2% or 1.9 by the end of the year. That will be core PCE inflation. And with that in mind, they anticipate to increase interest rate another 3 times. So that means that by the end of the year, again, inflation and interest rates are going to be fairly neutral, and you're not going to have conditions that are extremely, it's not, even if interest rates are high, it's not going to be the end of the world. So why all this long rant about this? Well, because I don't think that we're going to break below this low here, given the overall economic and conditions in the world. And yes, it can go down. And I do know some very savvy traders that bought down at the lows, and if we go all the way down here again, it wouldn't surprise me if they buy some here. And I think as long as it's above 11,861, I think people are going to be buying as well. I bought some myself, but I bought the S&P 500 at 2,600 and then got off about 100 points higher from there. So again, I remain bullish. Economic calendar for today. Don't forget to check this calendar out. It's faster than the one you're gonna find at the top websites. It gives you the data much faster. Obviously not a Bloomberg, but it gives you things much faster. In 2 hours and 43 minutes from now, we're gonna have the Bank of England rate decision meeting. You're gonna have the minutes from the last meeting, and you're gonna have the quarterly inflation report. This means that it's gonna be a real chop fest. You're gonna get the minutes, which you get that straight away, and then people try to see, okay, so did anybody want to increase interest rates last time? By how much? What are people concerned about? What are they happy about? And then you're gonna have the quarterly inflation report, which also includes a Q&A. So it's just gonna be a lot of most likely contradictory information that is gonna cost the pound to gain a lot and potentially decline a lot. I think you should just keep it very simple, and that is actually not to get involved. But if you do want to get involved, then I'm gonna share with you. So I'm bearish this market, and I think the pound dollar could go down to 137.45. It's challenging the low already here. So in the best of worlds, people break this low before the event. We go down to 37.45, book profits. That will be the ideal situation, because then we don't have to deal with this thing. However, though, if one looks to go short, it's gonna be difficult, and because you need to look into the details, you need to compare, and there's no straight formula I can just give you right now, but it's very straightforward in the sense that if they are aggressive and they want to increase interest rates by spring, then the pound is going to gain, and vice versa. So you need to look for signs for that, and then technically, as long as trade below 140.55, then it's fine to be bearish. Okay, good. That's today's market update. Join me tomorrow at 9 a.m. London time for updates like this, for 600 seconds of pure market analysis and trading and strategy. If you like it, don't forget to hit the like button on the YouTube video, and if you love us, don't forget to click on the little bell lamp. There's a little bell next to the like, which means that you're gonna get a notification when we're gonna do the webinar. You're also gonna get notifications if we upload any other videos on this channel. And as well, please don't forget to share. We're having a very good amount of people watching this updates every day, and we're really happy about that. But let us grow it even more. I would greatly appreciate that. And it's important. Why? Because I'm a trend follower. So if people like it, we'll do more of it. If people don't like it, I'll do less of it. Very straightforward. So if you like it, don't forget to share, don't forget to like, and have a good day, guys, and happy trading. Thank you.